bottom. Joining us in studio is John Kiemele, Senior Natural Gas and Electricity Analyst at Enpro International. John, great to have you in today.
Thank you.
We were just looking at the chart of natural gas, and it's not a pretty one. You think it hasn't hit bottom yet. We're trading around $2.57 today. How much farther does it have to go?
It really depends on how this winter shapes out. We really haven't had, other than this past weekend, very much winter weather. And if it continues like it has been, I think we could easily see the price in January and February get down to the $2 to $2.25 range. As for the year, for 2012, I think we could be about 15 to 20% lower than where we were in 2011.
Weather aside, because that's always fluctuating, of course, what other things do we have to watch? I mean, we talk a lot about supply, all this shale gas that's available. Is it just the supply equation?
Well, the demand is weak because of the weather, but the supply is still coming out. A lot of the producers have hedges in place that guarantee themselves some pretty healthy pricing for the gas that they're selling, so they're going to continue to produce that gas until those hedges run out. And as you mentioned, the shale gas plays are significant. One thing that could happen for the longer term to cause the price softening to end and actually see a return to some higher levels will be the end of these hedges that producers have in place. There's also a lot of political pressure on the shale gas where they're using the hydraulic fracturing, and it's not good for the environment. There's all kinds of problems, and that could have a negative impact on how much shale gas we see in future. So you see some of those things coming together, and it could start to see the end to this softening in price and some return to healthier pricing levels from a producer standpoint.
How healthy do you think they're going to get, though? If you see a bottom in pricing, say in 2012, or $2.25 or closer to $2, how much better is it going to get down the road once the hedges are washed out, once the shale gas situation is perhaps clarified a little bit better?
Well, once we start to get things in motion to get LNG shipped out of this country through the pipeline that's being built to Kiemele, BC, and start sending.
Yeah.
Well, the natural gas pipeline has the support of BC and has the support of the Prime Minister. It's very likely to go ahead, and it's supposed to come on stream in 2015. It's the oil pipeline that's having some political issues right now, but that's going to see a big increase in the demand for natural gas that's coming out of Alberta. So we could see prices back into the $4.50 to $5 range by that point, which would be a healthy range from a producing standpoint.
Over the short term, though, you're talking about hedging, so a lot of these companies are making money regardless or at these prices. At what price does it make sense to stop the shale exploration, to start shutting in production and reducing that supply? Is it $2? Is it $1.50?
Well, I think we're at the levels right now. When these hedges run out, if prices stay where they are, you're going to see gas wells get shut in Alberta. As for the shale plays, to have the leases, the long-term leases on the land where the shale gas is, they have to drill a certain amount. So they, regardless of where the pricing happens to be, if they want to keep the entitlement to that land, they have to keep producing gas. So that won't have as big of an impact, but you definitely will see gas wells shut in Alberta once the hedges expire.
So your job is to consult with companies that that consume natural gas and need to, come up with contracts and hedge for the future. What kind of advice are you giving right now, given we're sitting at $2.50? Is now the time to say, forget about, the next 3 months, it might drop lower, it might not, but $2.50, that's a pretty sweet contract if you're a long-term buyer of natural gas.
Well, you can pay the $2.50 if you're on a day-to-day spot basis, and many of our customers are buying a good percentage of their natural gas on a spot basis right now. For the longer-term pricing, I mean, you can lock in for the next year in the $2.80 range. The year after is a bit higher than that, so we're suggesting they just hold out and continue to enjoy the low spot prices while they exist. There's really no near-term danger to prices soaring. If we take a look at our inventories, we're way above where we were last year. We're above where the 5-year average was, and keep in mind that 5-year average keeps getting to be a different number every year because we've had year after year of low demands for gas and high inventories, so that 5-year average for gas inventories is just growing, it's not shrinking. So when we say we're better than the 5-year average, that's a really good position in terms of inventories.
And what about the demand side? I was looking at a chart relating, going back, I think, to about 1992, the price of oil to the price of natural gas. It's the highest ratio in that period, probably the highest ratio ever, 33 to 1 or thereabouts. Is there an opportunity for that switching from oil, or maybe it's just switching from coal? I don't have the ratios there. I mean, is there that opportunity when the price, and there's so much of it?
It's a good question. It makes no sense to have such disparity between one energy type and another. And oil and gas used to always follow a pattern where gas would be 70 to 80% of the price of oil, and it would rise and fall with the price of oil. But when the recession of '08 hit, there was a big disconnect. A lot of the industrial load of gas fell off. A lot of the electricity plants that used gas, their demands fell off, and gas prices just went south. Meanwhile, due to all kinds of factors, oil prices went north. And we've seen a disconnect, and it hasn't come back together. I don't know when it will come back together, if it will come back together.
But doesn't it, sorry, Marty, doesn't it encourage people, though, because it is a huge disconnect?
If you're able to switch, and definitely would encourage you to look at those options.
Right.
We have customers right now that are used to burning waste oil as a byproduct in order for energy, and they're switching to natural gas.
Right. Okay.
All right, thanks, John. Great to have you in today. Thanks for joining us.
Thank you very much.
We're joined by John Kiemele, Senior Natural Gas and Electricity Analyst at Enpro International. Quick break now.